Hi there, I'm Tyler Ballhorn from Stockscores. Welcome to the weekly Stockscores market analysis for February 16th, 2010. The first thing I want to show you this week is how to log in and use some of the tools on the new Stockscores trading desk. You can go to the trading desk by entering in this URL that I've highlighted in blue, tradingdesk.stockscores.com. Once you do that, you will arrive at a page that looks something like this. Click on the login button in the top right of the page and a login box will appear. Now, if you have never used the trading desk, you will first need to set up an account. This applies whether you are a new user of Stockscores or even an old user of Stockscores. You still need to set up an account for the trading desk. So make sure that if this is your first time using the trading desk, that you click on this link here that says clicking here. Now once you have done that, you simply click on the login button and it will take you into the trading desk. You will open on the My Trading Desk page, specifically the Trade Tracker. Now the tool that we are going to use for the analysis today is the Chart Watch area. I'm going to click on Chart Watch in the toolbar, and this is now a section where you can see a number of different watch lists and sectors that I have created for you, and you can see that they're all here along the right. For this video, we're going to look at the weekly market analysis sector, and is near the bottom of the list here. I'm going to click on that, and it will change for me now the active group that I am viewing. Now here we see it in table view. If we wanted to see the charts, we have two choices. We can either click on Gallery, which will bring us small thumbnail charts, and I can change the time frame using the time frame links at the top of the page, or I can click on Slideshow, which will take me through these charts one at a time. For the purpose of this analysis, we'll use the Slideshow feature, and I'll now go through the charts that make up this sector and provide you with my analysis. Starting us off, this is a chart of the Dow 30 ETF, the DIA Exchange Traded Fund. And I can draw some lines on here. We can see that the rising wedge pattern that had been forming over quite a long time was broken about a month ago, and we had a pullback about, I'm not sure what it was on the Dow, but on the NASDAQ was about 9% off of the highs. You know, a fairly significant pullback, something that's quite reasonable given the gains that the market had seen thus far. Now in the last few days, I have felt like the buyers were taking back control. If we zoom in on this chart a little bit, you can see that there's been some decent strength, and we've actually been able to break the very short-term downward trend line on the Dow, and it looks to me as though we are now going to rise back up toward longer-term resistance here on the Dow, and really for all the markets. Now if we bring this chart out a little bit again, we'll bring it back to a one-year chart. My expectation over the next maybe month or two is that this market now goes into a sideways trading range where we stay under this line of resistance, but we build an ascending triangle pattern. Now this is healthy for the market because this sort of basing provides a foundation for a future move to the upside. Now the concern is if on this little bounce back rally we fail to make a new high and instead go down through that line. If that happens, then we have to go back to being pessimistic. But for now, I think that we can be optimistic in the short term. Looks like we'll see a few upside days ahead of us. But in the medium term, I expect that this market will go sideways. Continuing on, we can click on the next button up here near the top of the page, and that will bring up our next chart. In this case, it is a chart for the Canadian dollar, the FXC ETF. It had a pretty good bounce off of support. It actually went through support in a short-term basis for a day and gave me a little bit of a concern that the Canadian dollar was not going to be able to hold in this trading range, but it has in fact done so, and it looks to me like it will continue in this rectangle consolidation for some time. Now it could break out through resistance, it could break out through the floor, but for now give this one a neutral rating, and a breakout either way will tell us the likely future direction. All right, next chart is for gold, and gold has made a little bit of a bounce, although the cycle here, or the pattern, still remains somewhat negative because we have this situation where we have falling tops. Now today's market action actually went through the recent high here, and so that cycle of falling tops has ended. We may now see gold starting to base, but I think it has some work to do before it can make a good rally toward the highs. So the picture for gold is improved. It's certainly better than it was last week, but I wouldn't yet jump on the bandwagon, although select stocks might give some trading opportunities. Moving along, this is the chart for oil. Oil has also been able to hold support. Again, just barely. It actually tickled through it on a couple of days, but we have rallied since then. This market remains neutral because it really isn't in an optimistic pattern. It is more or less a sideways pattern where we are trading between these two upper and lower boundaries. Next chart on our list for this week is the NASDAQ 100. And much like the Dow, it broke down from a rising wedge, had a pretty good little bit of profit taking, and we are now recovering. What we need to see is if this market can go back to the old highs or whether it makes a falling top. A falling top would be pessimistic. Old highs would at best, or pardon me, at a minimum be neutral, and if we can break through to new highs, then we can go back to an optimistic rating. S&P 500, really the same story. I'm not going to keep saying the same thing over and over again. Neutral pattern right now with the potential to get better. Short-term strength in the next few days is likely. TSX, very similar. The difference with the TSX is that it really didn't break its upward trend line. It has been in a sideways consolidation pattern for some time, but that pattern is an optimistic one because we have rising bottoms on the chart. Look for the TSX to rally up towards resistance before it gets stuck, and if we can ultimately get a breakout from this ascending triangle, then the Canadian market should be a top performer. Finally, the chart that we're going to finish off with is a chart of the US dollar index. The US dollar index made a little bit of a minor breakdown today in that it broke this little upward move here. However, the longer term upward trend line, and again, trend lines are always drawn across the bottoms of pullbacks, that upward trend line remains intact. So I expect some short-term weakness in the US dollar index. That's going to help things like gold and oil. But longer term, I do think that the US dollar is turning the corner and has good potential. The final thing I want to leave you with is just to highlight the Stockscores sectors, specifically the exchange-traded fund sectors that I have created for you. The exchange-traded funds are great proxies for the overall market and the different sectors in the market, and so I have created a number of groups of different exchange-traded funds. For example, if you are interested in some of the Asia-Pacific markets, you could click on Asia-Pacific, and you will now get a view of the 11 exchange-traded funds that I have put into this group. And just like before, if you don't want to look at it as a slideshow, but rather just as a list in a table format, you can do that by clicking on list, and those charts will come back way. And you can see here all of those charts pop up as we hover over the symbol. And you can also see that today most of those markets had pretty good gains. Of course, if you wanted to look at them in gallery view, simply click on gallery. You can do that. You can make them a one-year chart. If you wanted to zoom in on a chart from gallery view, simply click on the chart and you can get a much larger view of that particular chart. Well, that is about it for this week's Stockscores market analysis. For more information on the tools and services that we provide, please come visit us at www.stockscores.com. For people in Canada, I will be teaching trading courses in Calgary, Vancouver, and Toronto. Those are 3-day live trading courses. I will actually trade the market on the Monday and Tuesday, with our initial day, Sunday, being reserved for theory. If you have any questions about that, please email me at tylerb, Tylerb as in Bravo, @stockscores.com. Have a great week in the market and trade well.